So checking out crypto.com in the lower time frames like the 1 and the 4 hour, it looks like we're gearing up for a slight move back up to the upside. However, in the higher time frames like the daily and the weekly, it does still seem like we are gearing for that next move back down. That's what I want to talk about in this video. We're going to start off talking about the market structure, where I see us coming to in the next day, and more importantly, where I don't see us breaking above. And then we're going to finish off on the oscillators, momentum indicators, and talking about the risk in the market at this moment in time. So let's start right off on the market structure with a pretty clean chart. This fractal was played out time after time again. You have a breakdown, you form a head and shoulders pattern. Now this head and shoulders is a bearish pattern. However, the last head and shoulders that we actually got was up here, and this was an inverse head and shoulders, which is obviously a bullish pattern. We have to draw this one from the candle body closes instead of the wicks. Otherwise, this one would be very, very skewed and very ugly. Nonetheless, inverse head and shoulders, this is a bullish pattern. But why am I saying that this is the same fractal as what we're seeing down here? Well, what happened is we had a massive leg to the downside, massive capitulation. We basically crabbed sideways for a prolonged period in time, and then we found ourselves creating this rounding top structure as we collided with the daily EMA ribbons over here on the short-term moving average from the 21 EMA. We never even managed to get above the 21 EMA. In fact, when we came and back tested it the other day, we didn't quite touch it either, which really does just show that there is extreme weakness in the market right now. If we do come over to the EMA ribbons, you can see this is the 21 EMA on the daily time frame. This is the thicker line, the short-term moving average, and so far, basically every single time that we've been colliding into the 21 EMA, you know, in this instance we got a little bit higher, but as a general rule of thumb, unless you have a bullish flip of the EMA ribbons, then you'll just get gearing for that next move back down to the downside. And this is what I think we're getting ready to do right now. So, you know, why do I say then that in the lower time frames it looks like we're bullish? Well, there's a couple of different signals. I'm going to move on to the oscillators in a moment. Some of them are already starting to lose strength, so I really do want to focus on the higher time frames for this. But we also do have the next FOMC minutes meeting coming up today. I really don't want to jump heavily into this because I did make a video on my channel what to expect for today's FOMC meeting. However, I would just like to highlight every single time that we've previously had these FOMC meetings, we dump into them, and then on the day of the FOMC meeting, we get bearish news, but for some reason we pump anyway, and then it's just followed up by a massive leg to the downside. This has been true for both of the most recent FOMC meetings, and if it does play out again for Bitcoin, you know, once again, how does this affect crypto.com? Well, if Bitcoin comes up to 21,000 up here, or it comes up to 21,100 and moves back down to the downside, it would have either respectively got rejected from its 618 Fibonacci from the most recent high to the low, or if it only makes it up to 21,000, we might just end up coming right back into this line here, which is the downtrend from this bearish pennant that we're in. So what could this mean for crypto.com? Well, in the lower time frames, while yes, we are forming this head and shoulders, which is a bearish pattern, it is potentially likely that if Bitcoin rather has a bounce coming into the FOMC results, this is the minute meeting, by the way. This is not like the big FOMC meeting that happens once every 6 to 10 weeks. However, if we do have a tiny bit of continuation, I do want people to recognize it is possible for us to move up to price targets like the 21 EMA and the daily EMA ribbons up here at 12.3 to 12.4 cent, and we could still be moving up another couple of percent or so and still be confirming this as resistance. For example, we can still move up about 5.3% as of the time of recording this, but even if we do head up to here, we're very likely to get rejected. You know, we could be confirming some type of double top structure over on the shoulders. That's not too important really. The main thing that I want you to take away from this is even if we do have a slight move back up to the upside, we're very, very likely to play out this exact same fractal. However, this was an inverse head and shoulders, which is a bullish pattern. That doesn't necessarily matter. What does matter is you started to lose momentum, you came into the EMA ribbons and you broke down. How do we know that we were running out of momentum? Well, if we do look at the bottom side of the screen, you will notice that we are charting starting over here on the squeeze mom, the squeeze momentum indicator. And if we zoom back to times where crypto.com, like here and here, had some fairly decent runs to the upside, you can see the squeeze mom had these big parabolic runs where bulls did step into control of the market for about a couple of weeks to a month. What are we seeing right now? Well, we actually have to zoom in, expand this out to even kind of see what's going on here. And you can already see now that we've zoomed in, the previous runs up to the upside are just not even chartable on our screen. And then once we do move them down, so they are both chartable, you can really see we are flatter than a pancake right now in terms of the momentum that we've got. And this is why I see this fractal playing out almost to the teeth of what we saw over on this fractal. So once again, while it is possible for us to move up in the next couple of hours, I really wouldn't bet on it. The risk to reward of a 5% move back up to the EMA ribbons to round about 12 to 13 cent is really not worth the risk, considering how we've got this bearish fractal playing out once again. Now, you can see we had these bunny hills over on the data where you have a rounding top in the price action. We haven't quite solidified enough candles to have a rounding top yet. I mean, we've really kind of just come up and gone flat. So if we do get another push to the upside, followed by a stagnant candle, followed by a drop, followed by a drop, followed by a drop, you can start to see a rounding top formation play out, and this would beautifully outline this right shoulder, and then this would take us right back down to the heart line, or the neckline rather, of this head and shoulders down to 11.1 cent. Let's just make it easier for ourselves and say 11 cent. If you do start moving below 11 cent, you're basically going to be confirming the breakdown of this head and shoulders. I do think this is going to be coming very, very soon. Once again, I have to emphasize, by the time I upload this, you know, or even after I upload this, it is potentially likely that we can have maybe a 5% move, maybe a 10% move back up to the upside if Bitcoin comes up to 21,000 or 21,100. But if it does not manage to get over those regions, then this is just going to be another bearish fractal playing out where we get rejected from the EMA ribbon. So we definitely need to be careful. We do need to recognize that this is the quote-unquote bullish momentum that is stepping in. It is completely flat right now, flatter than a pancake, and like I said, I think we're getting ready for that next move back down to the downside. So let's talk about how our previous prediction has been panning out over on crypto.com before we do move over to the oscillators, momentum indicators, etc., and then wrap up this video. So it was this was the 24th of May, so you know, it was well over almost coming up for 2 months now, about 6 to 7 weeks or so. We were all the way up here at 17.9 cents, so basically 18 cent, and we were calling for a move down to 5 cent. Now this seemed very bearish at the time. This was a 71% drop, but even after this bounce, we're still down 35%, and since we made this prediction, we came down 45%. So we've basically already completed more than half of the move, and if we measure from where we are right now, or even better, let's measure from where we could potentially move up if we do form this right shoulder. You know, we can come down very quickly now and this would still mean that we're in a head and shoulders, or we could push up a tiny bit higher and this would still once again confirm the head and shoulders breakdown. So if we say hypothetically that we could move back up into the 21 EMA on the daily EMA ribbons, we could come up and once again solidify another 58% drop to the downside. So you definitely don't want to get caught with your pants down when this move comes into fruition. I would also like to say our previous predictions on crypto.com, not just this one, have been panning out very nicely. So, you know, there is going to be a time to be bullish on this. I'm not a crypto.com hater. I don't dislike the project. In fact, I was one of the people that had one of their higher tier crypto.com Visa cards. And if you do actually go back to my channel, you will see that I sold all of my crypto.com up here at 35 cent. Why did I sell at 35 cent? And most importantly, why on this approximate date over here on the 1st of May did we have a massive landslide? If you've been in the ecosystem for more than a couple of months or so, you will know that this is the day where they changed the staking rewards for their Visa cards. Like I said, I had one of their pretty high tier Visa cards and they basically took away all of my rewards and I was stuck with a card that was worth a decent chunk of money, and it just wasn't worth it for me. You know, I was getting free Netflix, which I don't watch. I was getting free Spotify, which I don't use, and the only real reason that I was using it was for the cashback, the staking rewards, etc. And basically like 90% or something of all of those rewards got decimated. They just took them away, so I sold all of my Crypto.com up here at 35 cents. Like I said, you can go over to my channel. I made a news update on this day. If we head over to my news playlist, it was over here. I believe this was on the 1st of May. So if you go back to these videos or you go back to my TA, you will be able to verify, you know, we sold Crypto.com all the way up here. And we're currently 66.5% to the downside. And I do think this has one last final flush out. So if we do come all the way down to 5 cents, this means that we would have dropped 85% since the Cowboy family sold CRO, and subsequently I would probably buy back my Visa card for an 85% discount. I think I could definitely justify rebuying one of their high tier Visa cards after I've got that massive discount in Crypto.com, because I do think this is going to perform well coming into the next bull run. But once again, look at the charts objectively. I leave my emotions at the door when I do this analysis. I don't bring my emotions to the table. I look at the charts for what they are, and this chart looks absolutely dog shit. It looks like we are heading down to lower prices, just like we've been predicting from all the way up here. So once again, not a hater of this project. Looking at this chart from a completely technical perspective, looking at the maths, looking at the momentum indicators, which we're going to hop into now, all signs point towards a breakdown, but potentially a move back up to 12 to 13 cents and then a breakdown. So let's look at the oscillators and momentum indicators. We talked about the reason why we might be seeing this quick pump today followed by a dump tomorrow, and this is because the FOMC minutes meeting is coming out today. And just like I said before, we had these blatantly obvious bull traps every single time, so it would not be surprising to see this playing out once again. And before we do talk about the oscillators, I would just like to let you know the dollar is still exceptionally strong right now, and the stock market is exceptionally bearish. So why do I mention this in a Crypto.com video? The dollar being strong and the stock market being weak are bearish signals for Bitcoin. Bitcoin is inversely correlated to the dollar, and it correlates to the stock market. So you can imagine if the dollar is heading up on a massive bull run, which it currently is, then you are going to see Bitcoin come down eventually. Crypto.com is going to follow. So we do need to look at the greater markets and recognize that even if we do have this small bounce to the upside, the dollar, when it opens tomorrow, if it does see continuation, it is going to slap the fake out right back down to the downside. So like I said, in the lower time frames, if we head over to the 1 hour, this is interesting because I looked at this chart about an hour ago or so, and we were gearing up for some bullish momentum, but we have actually started to wipe out some of the momentum. So this may come back after the FOMC results come out in the next couple of hours or so. We'll definitely have to keep an eye on that and see how it plays out, which is why I'm saying it is possible for us to move up, but the risk to reward ratio is really not in your favor if you're longing or spot buying right now. I just don't think that's a good idea. And you are already starting to see in the lower time frames, the momentum is actually switching back bearish, which is not a good sign. So we can always look at what happens when the FOMC meeting comes out, but at least as of the time of recording this, the 1 hour time frame, the 4 hour time frame for all of these is starting to head back down. Now, if we do look at the 4 hourly time frame, you can see the squeeze bomb is starting to tick over into dark green. You can normally see when this happens, we do get ready for a cascade in favor of the bears. The MFI, the money flow indicator, this basically went from 0 to 100. We came from 18 on the 29th of June all the way up to 79, which is just underneath the extremely overbought region. So we headed up way too quick for my liking, and you can normally see when you have these massive runs up very quickly, they come back down as fast as they come up. As they say, the bigger they are, the harder they fall. The faster this heads up, the quicker it gets overbought, the more brutal the next move back down to the downside is. And we're already seeing in the lower time frames, money is flowing back out of the market. We're looking at the squeeze bomb, the momentum indicators, these are heading down. The 4 hourly MACD is still just about kicking, but I can imagine in the next 4 hours, if Crypto.com does not start moving to the upside, and specifically in the next 4 to 8 hours, we're actually going to see the FOMC results. So we'll see if we get continuation on this. Once again, the risk to reward ratio is definitely not in your favor if you are bullish right now, but nonetheless, all of these pretty much call that we're losing momentum and about to head down. You can say, MACD is bullish. I would argue that we've double topped up here once. If I switch over to white, so you can actually see it over on this dark chart. So we've got a double top formation over on the MACD, and we've crossed bullish, but I mean, you know, we're just above the heart line. We're really not kicking too much. It does look like we're probably going to get ready to break down on this in the next couple of days, in my opinion. And then if we do solidify this as a lower high before we move back down, you know, considering on the higher time frames, things like the money flow indicator did head up very, very quickly. There's still a decent amount of room to move back down to the downside. Money can definitely flow out of the market. And once again, looking at the squeeze one, we already looked at this on the daily time frame over here. It's completely flat and stagnating, which really tells us that yes, in the next hour, the next 4 hours, we might move up to 12 to 13 cent. I wouldn't count on it. It's definitely more likely that in the next couple of days, we're going to get ready to get slapped back down to the downside. The daily MACD is still heading up, but you know, bear in mind we've got to wait for the daily close on this. If we don't get continuation, if we do start heading down, which I do think we're going to do in the next 48 hours, this is once again going to top out before we reach the heart line, and it's going to head down drastically. Now, just drawing a line of best fit, I don't think a trend line would draw this because it would show that it would break, that it has broken out. I'm really not a fan of trend lines because you can draw them a million and one different ways, but you can see that you've got a macro high up here, you've got a macro lower high, and if we do just come up to the heart line or even come up to here, we could just solidify another lower high in this market structure. And what you do notice with the lows is when we were bullish, the lows were kind of stagnating around about here. Then as the lows came down, you've got another macro low down here, big breakdown, another macro low down here, and you can actually see this was a lower low. So in terms of the bulls are heading down, they're running out of momentum, and in the higher time frames, the bears are actually gaining momentum, and I wouldn't be surprised if we get ready for that next move back down to the downside. So all signs count for one last capitulation, and I will be telling you my price targets in just 1 second. But if we do look at some other indicators like the OBV, the on balance volume, relatively flat right now. Once again, this has been stagnating for the past couple of days, and once again, it is basically just a lower high fest. I mean, if we zoom out, I really don't think I need to highlight it, but you know, once again, highs, lower highs, lower highs, lower highs, lower highs, lower highs. All signs point for one last capitulation to the downside. The RSI on the 4 hourly time frame is getting towards that heart line. I mean, it's just above the heart line, and I definitely think this is also going to be heading down very soon. The risk indicator on the 4 hourly time frame is actually pretty low. So this is kind of what I've been saying, you know, especially if you head up to the daily, the risk of buying crypto.com around these prices is, I feel like this is self-explanatory, is not as risky as when you were buying at these massive targets all the way up here, like 50 cent. This is when it started loading in on the risk indicator. This actually, I imagine, loaded in all the way up here at the massively oversold region. But I would like to highlight, while yes, I do believe that in the lower time frames, crypto.com is getting ready for another 55% flush out before we find our bottom, the risk indicators are telling us the bottom is probably getting pretty near. Bear in mind, there is only so much a risk indicator can tell you. If we're about to enter a global recession, which we could potentially be doing in the next month when we do get our GDP reports, then the risk indicator's kind of going to be thrown out the window, because you know, this only accounts for the mathematics of the sways in the market. The risk indicator can't factor in a global recession, so definitely take that with the hugest grain of salt. However, lower time frames, like I said, you are getting round about that risky level, and if we do zoom out, we did actually pop up to the overbought region around about 60%. So the risk is quite high if you are entering right now. Once again, I have been emphasizing this. It is very, very likely that we're once again going to find ourselves getting rejected from these from the daily EMA ribbons, and once again heading back down for these lower price targets. I need to get like a purple line or something, because I have to keep on changing the color every time we switch into our charts. But what are my price targets? Once again, I've already told you the 3.618 is down here at 5.2 cent. This is where I think we're coming to next. I don't necessarily want to predict a lower price target until we do come down to these regions. I like to take it one step at a time. So in the short term, if you're a little bit more bullish than me, we do actually have a 2.618 down here at 9.5 cent. However, I'm not really interested in that. You know, the low down here was at 9.8. So I don't think this is going to hold. Sure, this could be a pit stop. We could head down, bounce, do something like this, back test the low, and then head back down to these price targets that I've been predicting. But between 5.2 cent and also we do have, I believe this is a bearish pennant prediction that I will just double confirm in a second. This is actually down here at 4.95. You've got a 4.236 down here at 2.6 cent, which I'm not predicting. I don't think we're actually going to go that low, just so you know. Nonetheless, that is one target to keep in mind. Like I've been saying, I'm going to take it one price target at a time, and right now down here at 5.2 cent, this is what I'm predicting for. And like I said, this one down here just below 5 cent, 4.9 cent, this is the bear flag breakdown that I am saying, in my opinion, is going to come into fruition. So round about this green box down here, this is where I see Crypto.com bottoming in the bear market. Round about these levels is where I plan on buying back my Crypto.com Visa card. Once again, if you're new to the channel, warm welcome. You might be used to seeing, because, you know, out of curiosity, because I used to get recommended Crypto.com videos, I did type in Crypto.com over on YouTube, and the amount of BS hype clickbait over on the Crypto.com YouTube, you basically see YouTubers that have been saying for the past year straight, you know, since Crypto.com was at 98 cent, they've been saying $10 is on the table, $100 is on the table, the whole way down. You know, from 98 cent, every single one of them has been saying Crypto.com to the moon, Crypto.com to the moon, blah, 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 moon, moon, moon. That is all they talk about, and they've been religiously proven wrong. So once again, you might not be used to looking at a channel that, you know, leaves their emotions at the door and provides unbiased analysis. Once again, I'm not a hater of Crypto.com. I don't think it's going to zero. I don't think it's going anywhere. I'm not the biggest fan of the exchange, but nonetheless, I'm an investor. I don't love it. I don't hate it. I trade it. And based on, you know, the risk indicators, based on the oscillators, the market structure, it looks like we're going to play out this exact same fractal. Get ready for one last move to the downside. Within this final capitulation, I'm expecting Bitcoin to head down to round about 16.5k. That's personally where I'm hedging my bets for Bitcoin to move for its bear market low. Once that comes into play, I will be looking at picking up some Crypto.com. So once again, I'm not a hater of this project. I'm simply not a moon boy. I'm not a fanboy. I look at the charts objectively, and the charts tell me we're getting ready for the breakdown. I said the exact same thing in the last video when we were up here at 18 cent. I said the exact same thing on the 1st of May at 35 cent. You know, looking at these charts objectively, not religiously DCAing down like you're in a cult, is probably the best way to go about these markets. I'm only saying that from experience because I do care about, you know, how you guys operate in these markets. I was here in 2018. I DCA'd altcoins on the way down. I got slaughtered. I just don't want to see the same happen to you. So that's all I've got for Crypto.com. All signs point towards one final capitulation. Could we bounce up in the next couple of hours? It's definitely possible. Could we move up to 12 to 13 cent? We could. Would I be betting on that? Absolutely not. I would be betting on the move down to 5.2 cent in the next couple of weeks to the next month. As always, my friends, that is all I've got for you today. And as always, cowboy out. Peace.